Welcome, everyone. My name is Prerna Chaudhary, and I want to thank you all for joining today's webinar hosted by the Mobility Finance Network. Next slide, please. So before we move further into the content of the webinar, I just want to make sure our content is accessible to everyone here. So if you'd like to follow along in another language, you can do that through the captions function on your screen. So at the bottom of your screen, you will see a box with a CC written inside it. And this will give you access to changing captions to different languages. Thanks. Next slide, please. So what is the MFN or the Mobility Finance Network? So the MFN promotes financial solutions in support of a global mobility industry for good, benefiting those on the move. And so when we talk about those on the move, we mean workers, international students, and refugees worldwide. The MFN was born last year within labor mobility partnerships, and we now have an informal membership of over 300 people. And next slide, please. So what we've noticed as one of the biggest challenges, and I'm sure a lot of you relate to it, is a lack of targeted funding or financing for people on the move. And so this is demonstrated by a lack of cross-border mobility showing up as a core funding or financing priority for many traditional funders and investors, or just in the formal financial system offering relevant products for those on the move, or the ecosystem that supports them. So think about recruiters or training institutes. And so to bring more attention and conversation to the space, we launched the MFN last year. So it's a community of people and ideas at the intersection of the three circles you see here. So finance for impact, cross-border mobility, human rights, and livelihoods. So as facilitators of this network, Alicia, who will come on later, but also has a camera on right now, and we represent mobility interests at global events. We connect practitioners and funders, and we convene groups on specific topics and share ideas and try to cross-pollinate ideas across different contexts. Next slide, please. So we have three areas of focus in this webinar series. Each of these, we believe, contributes to a stronger, healthier, and more transparent mobility ecosystem. So in this session, and actually in this quarter, we have focused on migrant-focused financial solutions. Future sessions will focus on business support and tech investment. And please, if you do have an idea for a good session or would like to be a panelist or have an ideas of good panelists, reach out to Alicia and I. Next slide, please. So why do we even seek financial solutions for people on the move? Because in reality, it is a misconception that employers will cover all migration-related costs. Many of the costs are specifically associated with skill building, language learning, and just general readiness for migration are not covered by employers or are legally employers are not obligated to cover. And so if you think about it, a significant upfront financial investment is needed, even just thinking about the opportunity cost of time taken away from work while people study a language or prepare to move. And you add to that setup costs and moving to a new country and cross-border migration or cross-border movement becomes very expensive very quickly. Next slide, please. And so a quick word on how to participate in today's session. Please use the chat function, introduce yourself. We love an active chat. And if you have any specific questions for the panelists, who I will introduce shortly, use the Q&A section, which we will be moderating closely. Next slide, please. And so without further ado, I want to now introduce our speaker for today, Ashley Sherwin. So Ashley is the co-founder of Giving Credit, the credit reporting agency for community finance that aggregates peer lending transactions in trusted social networks, leveraging social underwriting to expand access to mainstream credit for underserved communities. She's committed her career to scaling innovative community-led solutions that drive better financial outcomes for underserved communities. And she most recently served as the Chief Operating Officer for Save Her Life, a nonprofit and advocacy organization using technology to improve the financial health of people living on low to moderate incomes. So I'll now hand over to Ashley to take us through community finance, the concept of social credit and its relevance to cross-border migration, and also the work of Giving Credit. So over to you, Ashley, and thank you so much for being here today. Give us a second as we get Ashley set up.
Yeah, thanks, Prerna. And as I get my screen set up, first off, it's really honestly a joy to be here today. Thank you to Prerna and Alicia and the team at LAMP and MFN for inviting me and seeing really the when I first met Alicia and Perna and introduced the concept of giving credit, and they introduced their work in the mobility finance world, they saw the intersections quicker than I did. And so I'm grateful for the way that they think and their innovation and bringing me to the table and introducing me to a whole new world that I haven't participated in. So very much looking forward to the conversation. So I won't introduce myself because Perna did a better job than I could have. But what I will say is just to give everybody a sense of how we'll spend the next probably 20 to 25 minutes. I want to leave a lot of time for a really robust conversation at the end and Q&A. Is I'm going to first start by just sort of setting the stage around what some of the gaps are in the finance and credit markets. Introduce this concept of what we call community finance for everyone. And then I'm going to focus in on the work that we're doing here domestically in the US, using the platform that myself and my business partner created, which is Giving Credit, to give us a sense of how we can leverage technology tools for community finance or peer lending. And then we'll wrap up around really throwing some ideas out there around how we can apply some of the things that Giving Credit is doing and some of these community finance tools to supporting people on the move. So that's sort of our roadmap for today, and hopefully that helps ground us. So let's get started. So wanted to just first start in saying, really set the stage, and Perna did a nice job of this in the beginning, so I won't spend too much time here, but what are the finance and credit gaps for migrant workers, refugees, immigrants when they're dealing with moving cross-border? As Perna already said, the migration costs often fall to the person. So when we're talking about movement for work, the employer is not always paying for everything. And there's a lot of upfront costs that are often really significant and fall to that person on the move. Additionally, I'm going to ground everything in the credit system. And so when we think about credit systems, global credit system, the concept of a global credit system is really non-existent. So every country and most countries have varying credit systems, credit bureaus, credit reports, credit scores. They're all kind of done differently, and they don't transfer from one country to the next. So if someone is moving from Germany to the United States or India to Germany, the credit that they've built in one country isn't necessarily going to transfer to the next. And so that causes some pretty significant issues financially when you are moving to a new country, depending on the new country's credit system. Here in the US, when we have a immigrant that is moving to the US, they basically come to the US with a zero credit history. And so they're one of the 45 million people in the United States who have no credit history or a thin credit profile. But credit's really critical in the United States, like it is in many other countries. It's needed to open bank accounts. It's needed to have access to wealth building tools. It's needed to get a job in many industries. It is needed to get an apartment and safe housing. And so credit really is sort of the backbone of our system. But I like to say that this concept of community finance, which I'm going to define here in a minute, could possibly solve for some of these gaps if we think about it creatively and innovatively and really think about this global transfer of credit. So to ground ourselves before we dive into giving credit is what is community finance? So we define community finance as lending, borrowing, resource pooling between a trusted social network. So that could be family, friends, neighbors, coworkers. It's this sort of informal financial economy that happens through, on a couple examples, peer-to-peer loans. So I give Perna a loan, Perna pays me back. Savings and lending circles, which are often known as tandas or susus in Latin countries, and I know India and the Philippines have other names for them. We see rent payments to roommates, roommates that might not be on leases, and then traditional bartering or exchanging of services. I'll pause here and say in many countries and cultures and religions, this is really the backbone of the financial system. It's cultural, it's built into the religious and practices we know in the Jewish faith as well as in the Muslim faith. Loans have to be at 0% and often are happened among community in that way. Some interesting things that happen in community finance that we can talk about are, unlike mainstream financial systems, the financial and lending decisions are really based on your character, not on any other algorithm or wealth or race or anything else. They're based on who do you know and how does that person sort of see you as a good credit risk. And it's really based in that community character and what people know of one another. I also always like to say that community finance is absolutely the oldest form of banking. Before we had a traditional banking system, community finance existed. And it's truly hidden from the credit market, whether it be here in the US or in other countries. And so I'll pose a question. Myself and my business partner often say that social credit is the only form of global credit. I would love to be proved wrong if there's another form of global credit, but I believe that social credit probably is the only form of global credit. And so your social credit that you have with your family and friends is often what is transferring with you when you are moving to a new country. So I'm going to move on to talk a little bit about our work here at Giving Credit. And I'm calling this the US case study. And that is because most of our work with Giving Credit is currently based in the United States. And so I'm going to talk a lot about the US credit system and what led us to building Giving Credit and what we're doing. But there are a lot of applications of the work that we're doing that can be done internationally in other markets as well. So we'll spend a little bit more time talking domestically here, but we'll weave in some of the international work as well. And so we like to say that Giving Credit is the credit reporting agency for community finance. So I mentioned before that gap, right? The community finance happens, but then things are not necessarily transparent to the mainstream credit system. So here in the United States, we know that the credit system is exclusionary. I have never said that to anybody who isn't that's going to argue with me, right? We know that the system has been designed to give some people access and some people not. So in the US, there are 45 million people who are credit invisible. People who are Latino or Black are twice as likely to face exclusion. And so when we're dealing with this level of exclusion within communities, there is then extraction that occurs. So alternative finance or high cost debt alternatives like payday lenders extract over $9.1 billion from these communities every single year in the United States. And so faced with that exclusion and extraction, not surprising, people really do engage in community finance. It's a very common behavior. So we know that 90% of low to moderate income individuals borrow from friends and families. That's just one-to-one peer loans. None of those other things that I'm mentioning in that community finance definition. And so, but it's not just people who live with low incomes who are participating in community finance. I'll pause and say I haven't met a single human being who hasn't participated in some form of community finance throughout their life. So it really goes across socioeconomic statuses that it occurs. And we know from some work that my business partner did at the Federal Reserve Bank of Boston that the US households hold an estimated $200 billion in peer-to-peer debt. So this really massive market of community financial transactions that's really 1/5 of the value of credit card debt in the United States, but it is completely hidden from the US mainstream credit system. And so what we know is that people are repaying loans every day, and they're showing their credit reliability in community every day. And so we believe that if we're truly going to create a financial system that is truly just, we need to start seeing people for who they really are. And if you look at the history of the US credit system, credit used to be entirely based on character. And so it's all about who knew you and who would vouch for you, and do you have good character. It really wasn't until the onslaught of technology and into the 60s and 70s in the United States when we started to build these exclusionary algorithms. And what that happened is at the time the technology wasn't strong enough, didn't have the sophistication to be able to figure out how to bring character in. So now character has been stripped of the credit system, and now we have this algorithm. In the US, it's the FICO score, that like 300 to 850 number. And it now character isn't used as a predictive part of who you are. And so credit might not be evenly distributed in the United States, but we know that character definitely is. And I'll pause and say your character is also global, right? How your community sees you is going to come with you into your next country as well. And so at Giving Credit, we like to say that we are building the Experian for community finance. So Experian being one of the main credit bureaus here in the United States. And so we are truly building out a brand new credit bureau that is focused on filling that gap in what access to data we have and collecting and aggregating that all of that community finance data. We then leverage and use that to put it into an alternative credit report, this brand new credit report that could be leveraged and used for underwriting of traditional or mainstream financial products. And when we think about somebody on the move, if they were to move into the US, they have that social credit that's coming with them, right? So we're able to collect and aggregate all of the lending and borrowing that happened in their home country, and then document and track that on this alternative credit report and do it fairly rapidly. That then allows for somebody who's immigrated into the United States to begin to build credit at a much quicker rate, and one that's focused on that global credit that truly happens with social credit. So how does this actually all work using our technology? So we've built a financial technology platform or product. People, consumers are able to join Giving Credit. They invite their friends and family, so that think of it as a social network, but we call it a social credit network. So you're going to invite your friends and family, and you use our platform to actually lend and borrow with that community, with your friends and family. And all of that data gets tracked and documented directly on to the Giving Credit report, helping you to build this alternative credit report in the United States. Our platform also allows for folks knowing that they have been moving money in their community way before Giving Credit existed. And they use a lot of third-party apps, so sort of social mobile apps, social finance mobile apps like Cash App or Venmo, PayPal, Zelle, Remitly is probably used for others. So we allow them to actually upload those bank statements of those financial apps. And then we are able to parse all of that data and add it on to the Giving Credit report as well. So that's the basic experience for a user. But then we think of Giving Credit truly as a marketplace and an ecosystem. So if we're really going to leverage the concept of how we bring what's happening in community and community finance to mainstream finance, we've got to bring partners onto the platform. So we do that in two core ways. One is partners can join the platform, refer their community, their members, their clients to start using Giving Credit, and then they can also create funds on the platform. And then we have financial institutions who use our credit report in underwriting, and we'll dive a little bit deeper into that in a minute. So here is a quick screenshot of what the Community Finance Credit Report looks like. So again, we call this the Giving Credit Report. It is very similar to a credit report that you might pull from one of the mainstream credit bureaus. It's going to have a score. Our score is super easy to interpret. It's good, neutral, or bad. We're not trying to play any funny numbers with any algorithms or trickiness. And then the actual underlying data on the report shows how much credit access you have with your community, what utilization of that credit you've had, and then it shows your whole loan history, whether you are the borrower or the lender in that. And we've built this to be incredibly consumer friendly in that we never share this data with anybody that the user has not explicitly given us permission to do so. And so to sort of round us back out to that partner side of the platform, I think this is where it gets pretty interesting of how we could use some of these tools at the intersection of community finance and mainstream finance for people on the move. Our platform allows for any organization or entity to create what we call a fund on the platform. Currently, we have 3 different fund types, although people are coming up with interesting ideas all the time, so this might expand. The one in the middle is we have the ability for partners to actually extend a 0% interest loan directly to their friends or family, similar in the same way that peers would do. So it's an entity funding a community member within their community. We do cash transfers, so we can actually just move money in a strict cash transfer grant to address the financial needs. And then we also do a thing called loan loss insurance, and I'll pause here and just spend a little bit more time here. A loan loss reserve is a term that's used with big banks. So the government is backing in many places the financial institution against default. So that they can go out and lend and be de-risked to some degree. But we don't do that in community. And so loan loss insurance is a tool that we are sort of pioneering at the community finance level that allows any entity to set up a fund and provide essentially a loan loss guarantee to a peer lender or a peer borrower so that they're protected against default. And it really then helps to protect the financial assets of the larger community while still leveraging and maximizing what already is happening in community. And then I'll just end by saying no credit report is great unless it's actually used for something. And so we have underwriting and data partners. Most of these are local community banks, credit unions who are leveraging and using our credit report as an additional data set into the underwriting and of loans at their bank. We're pretty new into the market. We launched about 2 years ago, and we've recorded about $363,000 in community financial transactions on the platform. We've had almost 400 loans on the platform. This is a bit outdated. And the loan amount to date is over $182,000 in community loans that we've tracked on our platform to date. And we have seen some international loans that happen. So we see that people are inviting friends or family who live in other countries and making cross-border financial transactions as well. So to root us back to why we're all here today and get us out of the US context, I believe, and Alicia and Perna opened my eyes to this, that community finance really could be used as a tool for mobility finance when we think about the intersection between traditional financial tools and community finance tools. So I think the question we have to pose ourselves is, what can we do as practitioners to apply community finance tools and the way that people are showing up in community for mobility finance? And a couple core ideas that come to mind is, can we provide a technology like giving credit or another technology that allows people to actually track these loans, so it isn't just a handshake, isn't on a piece of paper, but provides a real good documentation of that. As we said earlier, I believe that social credit is probably the only form of global credit. So can we truly build a cross-border credit report that's reflective of community? So if we are working with communities that are moving from one country to the next, can we help them build out this sort of form of a social credit or community finance credit report that then can be moved into the new country that they're in? And then, as I mentioned about our loan loss insurance, I think there's a real opportunity when we know that people are likely going to their friends and family to help pay for the training that they need in another language or for upfront costs when they're moving. is there a way for us to provide some loan loss insurance as practitioners to make sure that their community members aren't risking their financial futures, and really see a true return on leveraging and maximizing the community finance. So I'm going to pause there. I will turn off my screen share so that we can see more folks, and happy to take questions.
Thanks so much, Ashley. And again, every time I hear you speak about the work that Giving Credit is doing, it's just so obvious that it's so necessary and important and translates to cross-border mobility. So we'll open up for now for discussion. So please do drop your questions or anything you'd like to learn a little bit more about in the Q&A section. Let us know if you have trouble finding it. But maybe Ashley, I have a few questions that we can kick you off with. Were there any specific ecosystem partners that made the launch of Giving Credit possible or
Yeah.
sustainable?
Yeah, 100%. When we first launched Giving Credit, we knew that the communities that we were targeting to work with domestically were often the ones that were, we know that they were excluded from the mainstream financial system. So they were, hurt in that way. We also knew that, so the financial system wasn't working for them. We knew that technology wasn't always built for them. And therefore there was a lot of distrust that occurred. And so we made a really explicit decision to almost exclusively grow and bring Giving Credit users onto the platform through partners. And so we had a core group of community partners that had been in our network and really believed in what we did and wanted to try something innovative with us, that started out in our pilot year, and helped bring our initial users onto the platform. And that allowed us to build some trust, because Prerna, if you are a member of this social impact organization or a nonprofit in your community and you trust them, you're probably going to be a little bit more trusting of this like financial technology company. So I think from an ecosystem perspective, building trust is a really important one. And we've got to leverage the trust that already exists in community. I'll also say we didn't build anything at Giving Credit before we spent a good amount of time just talking to people and learning a lot more about how community finance is built. And so I would be remiss if I didn't say that probably the largest ecosystem partners were just people in community who were willing to open up and talk to us about how they were building and supporting their friends and family. And that really allowed us to better understand what was working well for them and where the gaps were. So yeah.
Great, thanks, Ashley. Um, and then maybe can you tell us, because again, as you said, the whole idea of formalizing social credit is just so new. Even though it's the oldest form of credit, as you just said. What was it like convincing investors and partners to contribute to something which, could be considered pretty like on the edge of the frontier of the edge, what
Yeah.
advice do you have for the rest of us going on that
Yeah.
journey?
Yeah. So my friend and business partner, David, he started this work. Well, a lot of the work, a lot of the ideas around Giving Credit started when we were colleagues together at a national nonprofit. And then he left there and took a fellowship at Princeton University. And if he was on this call, he would say he probably spent the first year and a half socializing this concept of peer lending and having a lot of people look at him and say he was crazy. And no, that doesn't happen. That's not a thing, blah, 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 blah. I came on board in January of 2024, so almost 2 years ago, and joining him as co-founder. I think he had set the stage a lot. I think a lot of the foundational research gave us some credibility. But we certainly have had an interesting journey where a lot of people have questioned whether or not, is this truly a behavior that's large enough? Will people track and document it? And I think from a, talking to investors, the things that have helped is being able to ground it in the research, right? And so, like, hey, this is actually just a common behavior, grounding it in the human experience. And so I often talk about the ways that I've been supported or other people have, and then people are like, oh wait, I actually have done that. The second piece of that I'll drill in a little bit on is really around what I have found more recently is there is a big movement around what we would call alternative data. And so in the credit system, alternative data sort of has a bit of a tailwind for us. And so there's a lot more rent reporting that's happening domestically, cash flow underwriting, and not just looking at the strict credit score. And as I mentioned, there isn't a single person in the US isn't going to say that the credit score is exclusionary. So grounding in that and trying to wave that, sort of ride those tailwinds, has made it a little bit easier. And I would say if you are interested in exploring what the intersection could be for your work, really try to find and ground what is the movement that's happening in the market you're operating in, and align yourself if you can to that so that it feels familiar.
I love that. Just being relevant and also having that personal touch. And I think too often, I think we focus on sort of the technicality or the theory rather than those two pretty simple points. But we actually have two questions now. So for the first one, Ashley, from an anonymous attendee is, can you speak to any tax implications and how users report this lending, if they do? And do you provide any financial literacy training or any information to users prior to joining the platform, either directly or through your partners?
Yeah, two great questions. So I am not an accountant, I'm not a tax advisor, but no, people don't report it. They're informal transactions. They're done. All the loans on our platform are done at 0% interest and no fee. And so there really isn't sort of a large tax implication, mostly because of that, as well as because the dollar amounts are often very low. When you are talking about somebody who is wealthier, they may have a movement of money that is much more significant. But in our target demographic, the average loan on our platform is $400, right? So it's a much smaller amount of money. Not that people don't move larger money, we do see that as well. So yeah, there isn't a significant tax implication. We don't have a sense of tax implication in the system. It's really a sort of reciprocal transaction. When you're talking about sort of the functions around gifting money, in the United States, the gift tax, you have to hit a very high dollar amounts, like in several millions of dollars before there is a gift tax. So when it's coming from a friend or family. So yeah, the tax implications are really, really minor, especially with our target demographic. I think the second question around financial literacy, it's a good one. We do not. That is not our core business. That is not our, what I would say we are good at, but we believe that others really are. So many of our partners that are referring clients are doing some form of financial literacy or financial education that's baked into the programs and services. And so yes, many of our users on the platform are already a part of those ecosystems. We are launching in the new year an offers section on our platform, which will include some of those partners that we believe are doing really great work on the financial education and literacy side of the house, where we will refer our users over to them if they are interested. At the core, we believe that people should have a choice of what they engage in. And if they are interested in engaging in those types of services, then we want to make sure that we give them what we believe are the best in class, best ones.
Great. Thanks, Ashley. So our next question is about transferability. So what core elements of giving credits model, and as you acknowledged, it's US focused for now. But what core elements of the model could be most easily transferable to African contexts, even in terms of design features, elements? I know you've already done some thinking around this.
Yeah, a little bit. And it's not an area of expertise for me. What I will say is I think I know some founders that are doing some social lending components in Africa using technology. And so they're looking at a lot of the mobile phone transactions that occur, and they're able to track and document some of that alternative data, social lending and social credit being one of them. And so I do think it's transferable. I think it's a matter of looking at where does the data sit and how do you sort of parse that data in an easy way for the resident, and then get it into something that is digestible and be viewed as a true credit report. For the folks that are asking about Africa, reach out to me later. I can connect you with the founder. I know that's doing some work in Africa and some pretty interesting work there. So.
Great. Thanks. So the next question we have is as you did your research in launching a platform, did you learn any interesting lessons from Circle Lending, for instance, the social lending platform, or its founder, Ashish Advani, uh, before it shut down?
Yeah. So I have not met that founder. I am well aware of what Circle Lending was doing. We definitely looked into their model. I think for us, there's a lot of organizations and companies that are doing sort of the Asusus, Tandas, the more savings circles, lending circles part of the work. And we definitely see that as a part of community finance. For us, when we look at the market, I think it's only, the research says that only like six don't, this may not be perfect in the stats, but the research shows that about 6% of the LMI population in the US participates in the sort of more circle or lending circles, where 90% participate in the one-to-one. So we will certainly begin to capture some of that lending circle stuff, but what we know is the vast majority of the population is actually participating more in the one-to-one, which is why we focus the functions of our app on that one-to-one peer lending first. But we certainly have learned a lot from them and sort of sit on the, backbone of the work that they've done as well to sort of bring social lending into the landscape.
Thanks, Ashley. And I should probably know that that was from Bo. Our next question is from Keenan, who wants to learn a little bit more on have you seeing any proof of transfer of creditworthiness um, sorry, no, yes. Have you seen any proof of transfer of creditworthiness? No, sorry. Once again, sorry. Keenan's question is, are you seeing barriers for users? I'll get there eventually. Are you seeing barriers for users to use this credit system to increase access to traditional finance services, such as more institutional loans or credit cards, and how are you navigating these barriers?
Yeah. Great question. This is the classic chicken and an egg problem when you're trying to do something brand new. So we are very early in our stages of onboarding and launching what I would call the traditional financial institution partners. So we have a credit union who is going to be launching in 2026. We're talking to many CDFIs and other lending institutions who are interested in using our data. We think about the use of our data and the report everywhere from that sort of local, regional financial institution to the fintech lending apps, all the way up to could FICO use, FICO or any of the scoring agencies use our data. So we've had conversations across that ecosystem that have all gone very, very well. People are very interested in how could this data help to open up larger access. But since we are new and fairly new in tracking and collecting that data, a certain level of users and data access is needed to sort of really unlock some of those major players. So as I mentioned, we'll be in 2026 launching our very first financial partners that will start using our platform to offer their products, but then use it for underwriting. And the way that they are thinking about that is twofold. They aren't going to abandon their old underwriting practices. So many of them are going to do their traditional underwriting, and then they will look at the giving credit report. And maybe they'll be able to, from early modeling, they've been able to say, hey, we think that we'll be able to get an interest rate down for somebody that we might have already given a loan to. The second way is they're thinking about the folks that sit right outside of their credit box. And so what I might call those marginal declines. So they maybe wanted to make that loan, but it's right out of their risk threshold. So what they will do is then send them to giving credit, have them build up their giving credit report, and then they will take a second look at that. And in early modeling with some of these partners that we're talking to, they believe that then that will open up folks that they would have denied. They might be able to get that loan in the future. So a lot of the ways that we're sort of thinking about that. And then lastly, we have a lot of partners who recognize that the financial products they have are not everybody's ready for them. And so there are a lot of them are using or will be using our fund partnerships to deploy some smaller dollar loans at a 0% interest through our platform to help them build that credit and get them ready for the larger, more wealth building loan. So hopefully that answered your question. I wish I had a really direct yes, but it's part of being in the early stages of building something.
No, that's great. And I think even just that sort of step change in building credit history is so critical.
Yeah.
Um, one last question. Oh, one last question from the audience. Is there an easy parallel we can draw in the world of credit for well-resourced people, when we think about the work of for giving credit, just in terms of like marketing or explanation purposes?
Yeah.
Um,
Yeah. So, as I mentioned, I haven't talked to a single person who, after you spend a little time with them, they don't recognize that they have done community finance. So, I'll give you some examples in my own life. My grandfather and grandmother helped finance the down payment on a home for my parents. And that really then jump started my parents' ability to build wealth in the United States. So that's one example. Other ones that I like to give are, have you ever been the co-signer for your kids on a credit card when they were younger? That is community finance, right? You are using your own financial tools to help them build credit. So that we 100% see as community finance. My parents gave my brother a loan to help him buy a camera he needed to be able to start his photography business, right? All community finance activities. But I think when you aren't living with low income, you don't necessarily, it's not a critical part of your everyday, right? And so I think people forget that they do have these examples. And so, yeah, I would also just, push it back to you all and say, like, when has it shown up in your life? When have you seen it happen? And then use those as critical examples. And I'll throw one more out. One of my best friends was getting married, and she needed to buy her wedding dress, and I gave her a loan to purchase her wedding dress so that she could get the wedding dress of her dreams, and then it was paid back and she had a lovely wedding. So I think we all have those examples, and some of them are really small and some of them are meaningful emotionally or meaningful in setting them up financially.
Ashley, I'll pop in with a question that I've actually had for you for a while. I
Uh-oh.
saw this. No, I saw this great LinkedIn post you did. Like, very rarely does a LinkedIn post actually stick in my mind.
Okay.
But you had, I think you had just pitched an investment in your platform. Maybe you had gone to Silicon Valley. I'm trying to remember, and you talked about how the investment advice or the pitching advice that you were getting from actual advisors in this space, the people who were telling you, here's how to go pitch your business, was very much like pushing you towards this like hockey stick numbers or just big growth numbers for what your platform could do. And in your post, you said, that's not who we are. We are building a platform that's for the community. And like, the reality is, we're not going to end up with that kind of growth. We are not that kind of business. We do want investment. We want patient capital. We will be profitable, but it just won't look like these massive multiplier returns. And it resonated so much with me, for any impact investing work I've done, at least in kind of the development finance space, and the social benefit space, is like, there are trade-offs. The returns for doing this kind of work are not
Mhm.
glorious. They're not going to make anybody rich. Investing in your business and your platform is important and it's rewarding, but we don't have to be maximizing profit all the time. And so we at LAMP and at MFN, when we're looking at different financial product designs, we actually get a lot of pressure to say, but don't you want to show this profitability over time really taking off with scale? And it's like, we're going to show you the numbers that we can get with real data, with like a genuine, we want to be very genuine about it. But there's a lot of pressure to say, yeah, but they understand that none of those numbers are real anyway. People have said this. And so
Uh-huh.
I just saw this great post that you did about it, and I wonder, how did you end up navigating that in the end? What did you communicate after you got that advice, and what were the results of that?
Yeah, thank you for raising this. I wrote that post because I was frankly kind of angry.
You seemed angry, but
So
in a
maybe
good way.
maybe
Like,
maybe great LinkedIn posts come from being angry. I did sleep on it before I posted it, but yeah, I mean, so the edit I'll say there is I do believe that giving credit could be really profitable and make, but that at the end of the day, our work collectively is about building for both first social returns and second financial returns. And I'm really clear that there are just certain types of investors and supporters of the work. And I only want those to come in on board and really be a partner in this work. And so to put some context, that conversation was in a mentoring or advisor session. It was a more traditional VC that was looking at my 5-year projections that were honestly very realistic, but still optimistic, right? And they said, that's not enough of a hockey stick. You need to, basically told me to lie, to just show the hockey stick because that's what we're going to need. My response to her was, I'll never lie. I'm going to be honest and transparent. I led with the fact that we were building for both social returns and financial returns, and that I believe that those two things can happen in together, and that the kind of business we were building wasn't going to see a hockey stick in the first 5 years, because it's about collecting and aggregating the data and really creating a whole new system that doesn't exist. And then we have been raising a pre-seed round, and at that time we had raised 80% of our round. And I said, well, I've raised 80% of the round with these projections, so I'm pretty proud that we have. And I don't think I have a need to change them. And so, yeah, I think it's about just pushing back, and acknowledging and recognizing that the social returns need to be number one and what we care the most about, and that financial returns can absolutely happen at that same time. But if we're not building for social returns, then I don't know why any of us are in the impact business. So,
thank you so much. I really,
yeah, of course.
thank you for posting it. I mean, it resonated so much. We face this a lot. We're looking at multiple numbers, like different platforms and different projections right now. And it is interesting that even, patient capital investors who are willing to take a loss still want to see some other kinds, like a certain story that like we've just all we've started to hear the story as being the norm, the kind of Silicon Valley is the norm, and it is not the norm. There are all kinds of investments out there, and VC is just one kind of investment. So
That's
thank
right.
you.
That's exactly right.
So I have one other question, and it's coming from a position of like our curiosity at MFN and LAMP is, if we started to see a program where we could start using this in another country, where actually that lending is happening, being originated in another country. I know we talked a long time ago about what would it take to get this up in Latin America. Could we tap into other credit bureaus, other contexts? What should people do if they want to start exploring that idea with you?
Yeah. So, I mean, the first off is shoot me an email, reach out, let's have the conversation. From a purely what we would have to do, one, I'd have to get up to speed and learn a little bit more about the context in the country that you are working in. Two, we've got what I believe are two areas we've got to address. One is language, and one is around currency. And so currently our platform only operates in the US dollar. That doesn't mean that it can't. It is built in the underlying architecture of the platform is built to handle other currencies, but right now we only have the US dollar as a concept of currency. The platform also then under the undersiding of the architecture can allow for multiple languages, but as you know, translating an entire platform from English to German or whatever it is, Portuguese, is a task. And so if we can think about the financing to be able to cover the cost of sort of those bodies of work, then yeah, 100% we could absolutely do the work. We, as I mentioned earlier, we've got folks here in the US, like business partner himself makes loans to his mother all the time. And she's in Panama. So, and we see that in with other people as well. So we definitely want to be doing cross-border work. It's a larger part of our vision. So if you all are interested and want to dive in with us, yeah, we'd love to have the conversation, figure it out.
Wonderful. Thank you so much.
Yeah.
And with that, I think we're kind of at time. So we just wanted to take the last few minutes to say thank you so much. We've really enjoyed having you here, and we've been excited to bring you on because this is, you know, we hear a lot about innovative finance, but this is truly breaking boundaries. This is completely new. I know when people look at the numbers, it's like, well, this is small, it's under 400,000, but this is just getting off the ground. And it really, I think, has the power to be revolutionary. So I put you guys as one to watch for the mobility finance community. It's just really taking something that is already existing and formalizing it. And also, we think a lot about in this community about how to avoid debt bondage and how to avoid using informal lenders, but in the bad way, right? We want to move from informal lending that's damaging to potentially informal or formal lending, but that's structured and responsible and protected. So this is really, really exciting for us. Really appreciate you being here.
Well, thank you for having me. I really appreciate it.
Wonderful. And quick shout out to Jess Lee, who I see introduced us. This is just an example of our community. She's on the call with us today to see kind of how this connection happened. Other folks who wanted to recommend somebody for our webinar or to get involved in the MFN, that's how we're meeting people. So please do broker introductions, get on our LinkedIn group and just start connecting amongst yourselves, because we don't need to facilitate absolutely everything. We want everybody to be able to talk to each other. It's definitely meant to be a community. And so thank you guys for being here. Quick note is that our first webinar of 2026 will be January 26th with the BAFA. This is a German construction association that has solved for some of the cross-border nuances of who should pay what when. They've negotiated a lot with like IOM and ILO and local businesses, trying to come to kind of a fair, risk-adjusted way for everybody to invest in construction mobility between countries abroad, North Africa and Africa to Germany. So hope folks can make it then. We will send out an announcement soon. We will also send out a survey link so you can tell us how this webinar went for you. And everybody have a great end of year. Hope it's not too chaotic for folks, and we'll see you in 2026.